Okay, first of all, thanks very much. I appreciate being here. Thanks to Dunhill. It's good to be with you today. I know we're going to try to move things along quite quickly because we don't want to keep you here too long, and we're already behind the eight ball. So what I'm going to chat to you today about is the international side. Some of you will have clients and will have people that you know that are foreign nationals, that are international. Some of you may not. Hopefully you guys won't go to sleep. You'll find something interesting in a couple of the pieces that I do on the product. So I didn't let no further ado. Let's just head on into it. Okay, I'm going to cover international underwriting capabilities, give you an introduction to our Index UL, and tell you why I think that ties in very well to the international side, and then just do a couple of case studies. Pretty darn simple. Okay. In the international market, if any of you worked in that market with foreign nationals, you'll know one thing. And the thing you will know is that it's very difficult to get large retention amounts of money. Okay? You can approach many carriers who may have a $15, $20 million, whatever that number is, retention limit, but the moment they get into the international market, those numbers start to disappear, they start to become a lot smaller, there becomes a lot of restrictions, and I'll show you that in a minute. So the first thing that we have is a large retention amount. I'll chat to you about that. We have there no reinsurance involvement. That is the same for my domestic life insurance as it is for my international. I wanted to spend a little bit of time on it, 30 seconds or less on that one, okay? What that means is that when I talk to you about $20 million and for a domestic life insurance policy on an American citizen, I have $20 million available up to age 80. What is interesting about that is it's my own money. 300,000 stays here in America, 19.7 million goes back to Mother Zurich in Switzerland. The bottom line of that is I have a negative and I have a positive. My negative is if you come to me and say, well, give me 21 million, I say, I'm sorry, I can only do 20. That's my negative. My positive is, and this is a big one, I don't care what's in force already. I don't care what you're applying for. So let's take a very famous guy, and this is just an example. It's not done. Don't think this is Steven Spielberg, but let's take Steven Spielberg. Let's assume that Steven Spielberg has run out of capacity. Okay, he's got, I don't know, pick a number, $350 million of life insurance in force. But if he could get more, he would like more. But he's run out. The thing for you to do with Zurich is to go back to any estate planning attorneys you know, any accountants you know, and say, hey, I just heard something that's interesting. A new company's come to town, its name is Zurich, you'll have no problem with that, everybody knows that name, and they have $20 million available, without any care as to what is in force, or what you're still applying for, or what you're putting together in a stacking situation. As long as the insured qualifies medically and financially, that 20 million is available. So I will tell you, irrespective of the international side, okay, if you know estate planning attorneys, and most of you do, if you know CPAs in your market, and most of you do, if you just go back to them and say, hey, have you got any clients that may be interested in more insurance if they could find it? I will take any bet you like that every one of you will find somebody who says, yeah, I got a couple. You will all have it, because I know every one of you people in the room here today knows an estate planning attorney or two, and knows an CPA or two, and they know who needs more life insurance, or has talked about it. Okay, availability of standard or better, we'll get into that in a minute, and then flexibility of travel for US citizens, we'll cover that as well. All right, on the international side, we look at 4 people. I'm going to very quickly look at it. We look at US citizens, being more than 6 months in the United States. Green card holders, US permanent residents, okay? They will be treated as US citizens if they've been here over the last 6 months. Foreign nationals, that's a true foreign national. The one that's interesting there, okay, is a US citizen residing more than 6 months outside the US. That's a little tricky one that you've got to know. You've got a US citizen who's living in the Philippines, let's say, and they're living there more than 6 months a year, they are going to be judged as a Filipino resident. And then finally, the visa holder, and that's the opposite, basically. If they're residing full-time in the United States on a work visa, we go back to using the country of origin. Because obviously, the H-1 visa or the B-1 visa or whatever can go back to their country. Okay. I'm going to keep moving fast because I know Tony wants us to get out of here. If you have a question, just stick up your hand and I'll come to you. I don't see any hands, I just keep talking. Okay? All right, here's what I was referring to earlier. This is the problem that you have in the international market. And the problem is twofold. One, very often you can't get large amounts of money available. It's not available no matter what the insurance company is speaking to. Because the problem that they have is they've normally always got a reinsurer in the background, and the reinsurance contract that they have precludes the 20 million to the 10 million to the 15 millions. The other problem is that one. Where is it? Less competitive classes. Often you will find that if the guy that is the foreign national is a preferred best, you can't get him a preferred best rate. You're down at standard, you may be preferred. Generally, you're down at standard. So there are your two big problems. Can't get enough life insurance, and can't get it at a rate that the guy truly, really qualifies for. What we do is we have, as I've said before, no reinsurance involvement. Decision made by staff, quicker response. Okay, so there's where we start to play, and there is where things become interesting. In the packages I gave you, and I apologize, you guys got a pile of stuff back on your desk when you came back after lunch, but there is a Zurich one in there. If you open it up at the back, you will see my international underwriting guidelines. Every country, I don't know if it's every country in the world, it pretty much is. Every country in the world is there, and you'll see there an A and a B and a C and a D. You turn to the back page and it'll tell you what we make available. And there basically you see A and B countries up to $20 million, A and B countries, availability up to preferred best. Okay? Mexico, which we get a lot, is a B country, we can get $20 million up to preferred. Israel is a $20 million case, $20 million preferred best. Okay, a couple of things to know. High net worth, we want the guy to be worth more than $5 million. Not in America, around the world. This one I'm going to speak about in a minute because that's a truly critical one. And if you have a problem with me being Zurich, I'll tell you right now, that's going to be your problem. So I'm going to explain that one in detail. We look at residents travel to major cities. We have a maximum issue age of 70, and we have a maximum substandard up to table 4. So I won't do a table 8, I won't do a table 6, and I won't do a 75-year-old. Okay, these are the requirements. You can read through them. They're all in the guidelines that I talked to you about. But I want to just focus on that one in particular. Okay, we're pretty much the same as everybody. You've got to come to America. You've got to do your application in America. You've got to do your medical in America, etc. Why? Because truthfully, we're trying to make it an American policy. Okay, so in order to comply with our compliance and our attorneys and all the other people, we have to do it here. But I do require that the proposed insured, owns property or business in the U.S. at least 12 months prior to application date. If you're going to fail with me, I'm just being honest with you, that's most probably where you're going to fail. Because I need the guy to own a piece of property, the guy being insured, a piece of property, or have a proper company here. Does an investment account and a bank account? No. Okay? Does it have to be the Taj Mahal he owns or she owns here in America? No. I don't care if it's a darn little condo of $100,000 in the outskirts of San Diego. I just need to have some property.
What about corporate executive?
Corporate executive that does what?
Living here.
He's
in a corporation.
But he's a foreign national, but he's living in America. As long as he complies with that, it's okay.
So
He's got to own part of the business,
all part of it.
or he's got to own some real estate. And truthfully, guys, why you asked me why have I got that requirement? I got it because I got a whole bunch of Swiss lawyers who demand it. Simple as that. Okay? Okay, we don't do the following, and that's pretty much the same as everybody. If you look through that, it's pretty much the same that everybody does. We don't do government leaders, politicians, diplomats, blah, blah, blah. By the way, if you see that one, okay, I didn't know what the hell that one was. Does anyone know what OFAC is?
Oh, yes.
All right. OFAC is the Office of Foreign Asset Control. Bottom line, it's countries we have sanctions against. Pretty much. Okay, so, hell, I didn't.
So Iran is out?
Iran's out.
Iran's out.
So Iran's out.
Yeah, Iran is definitely.
Yeah, Iran's out. I think Cuba's out too, although you don't tell Jay-Z that. Okay? Country classifications vary with world conditions. Consult Dunhill. Please, guys, these change all the time. If you're not certain about it, get hold of Dunhill. Hey, they do change. That one here changes. Okay? So, check with Dunhill. I think some of you already may know that. If you don't know that, basically if somebody lives in Florida, Georgia, Colorado, by law in America, you're not allowed to ask where they're going or what they're doing. Interesting. Very interesting. You're not allowed by law to ask those guys, do you go, are you going anywhere? Quite an interesting deal. So if you live in any of those, I'm not allowed to say, are you going to Iran for the next 6 months? Not allowed to. Okay. We also can do international travel by US citizens. You can see some there. Africa, okay? As long as it's, depending on the country, safari, hind excursions up to 2 weeks, we can do preferred best. What you're seeing basically is a lot of preferred best. So if you go away from anything with today's meeting, just remember, preferred best and 20 million. Those are the two things.
And everyone needs 20 million.
Yeah, at least. All right, let's have a quick look at my Index UL. And this is a plug for my Index UL, but there is a reason for it. And I'm going to tell you. Basically, our Index UL has a very high international component. And that's why it is interesting to foreign nationals and to people that are buying American insurance, but they live in another country in the world. Okay? And we have four major areas that are good. We have a lapse protection variant extension rider. What the hell is that? It's very simple. It's my guaranteed death benefit rider. For those of you that are selling no lapse guarantees and are starting to look at Index Universal Life, and pretty much everybody in this room I think will be at that point if they haven't already crossed over into Index UL Life world, the bridge that takes you across is the guarantee. Because it's real hard to sell somebody who's looking at guarantees on death benefit like the GUL that we know well, moving to a product with absolutely no guarantees. So we've got a strong guarantee, and I'll show you that in a minute. That's big, okay? We roll the target until you hit it. So if you play games with the premiums to be flexible, to lower them, to move them around, to do things with them, Tony and his boys are really good at that and understanding that. They have sold a lot of my IUL this year. Thank you, Tony. You don't lose out on commission. If it takes a year, 2, 3, 4, 5 to get to your target, we pay you first year commission until you hit that target. And they're high. Strong base pricing, powerful credit methodology. Let's move on because I don't want to take long. Okay, here's that guarantee. Okay, there we've looked at a male, we've looked at his life expectancies on those issue ages. That's what the LPPE rider does. So basically what you're seeing is it's going to get the client to about life expectancy or a couple, 2, 3, 4 years higher than life expectancy. So when you're selling it, you say to the guy, it's an Index UL, there are advantages to that, but let's slip on that guarantee rider. Very, very inexpensive. A 40-year-old has a guarantee out to age 80. For $1 million, it costs them $50 a year. Extra premium to get that $1 million guarantee out to age 80. I would always stick it on. Okay, there's our target premium. It's interesting. We use the same guy. What we did, we said, here's a 2.5 million face. Let's pay continuous pays to keep the thing alive till 121, and we just put it at 6.5 or 8 number. 45, 55, 65. There's the level. There's the target. There's how long it rolls. And it will roll forever. The longest I've seen is 4.5 years. Guy actually set up a 25, basically like a 20-year. You know how you can create an IUL and make it look like a 20-year term? Pretty much, okay? That's what he did. And his guarantee ran for 4.5 years. Or at least his rolling target did for 4.5 years. Okay, having a quick look at the index ULs, at the interest accounts. Short term, everyone's got that. Put the money in, keep it there for a few weeks, pull it out, put it in the index. Pays you nothing, but it holds it there. Long term, that's bonds and fixed interest investments like a UL. S&P 500, we have a simple S&P 500 index account. As the S&P does, so does my product. But if you buy my product, you're really going to go there. That's where your money's going to go, in a domestic multi-index and a global multi. There they are. There's the domestic, there's the global. The first thing you see is each one of them has 3 accounts in them. In the domestic, that covers your large caps, that covers your small caps, and we're the only company in the country that has a commodity index, which is an interesting mix between equities and commodities. Moving to the global, covers America, covers the developed countries, covers the emerging countries, the Brazils, the Russias, the India, Chinas. 1 year point to point, okay? We're a bunch of ex-American General Life guys, okay? We wanted, when we created Zurich, we wanted to do a 1 year point to point. We learned how hard it is to sell a 5 year point to point, okay? We wanted to go back to a 1 year point to point. Go to it. Overweighting, 70% weighting to the first index, 30 to the second, 0 to the worst. Okay, we talked earlier today about RIAs and all of that stuff, okay? But I also know that often when selling an index UL, you guys don't want to be in the position of having to tell the client which policy, which index to go in with their multi-indices every year. My experience is most of the guys say that's not my bag. Fair. Yeah. I better not say, but you know it's pretty hard to predict which one's going to come first, second, and third. Let's leave it like that. Just look at any of the statistics. What this thing done on a 1 year point to point is it gives you 70% of number 1, 30% of number 2, and it throws out the worst performers. So it's going to look at what did the first one do and give you 70% of that growth up to a cap. What did the second one do? Give you 30% of that, and it's going to throw out the worst performer. And we're the only company in the country that at this stage has that type of overrating on a 1 year point to point. Everybody else that has a 1 year point to point gives you a portion of the worst performer. We do not. Let me go back. On oh man, okay. Now I'm really getting this time. There we go. Okay. On the domestic, the cap is 10. On the global, the cap is 10.5. Okay, everybody's, oh, that's low. Oh man, I got 14% here, 13. The question is not how high the cap is. The question is how often you hit it. Okay? We hit, on the last 20 years, we hit the cap of 10, 65% of the time. We had the cap of 10.5, 70% of the time. 70% of the years. Okay, what?
Does everyone understand that's because of the weighting? When they take the first test, and that's
Yeah.
why ones that don't have the weighting may only hit it 20% of the time, even though.
Thank you. Yeah, good point. That's the MBA from Columbia speaking. Those are the countries we cover. We cover small caps and large caps, developed and emerging economies, and we're very interested that we have this commodity equity. And for those of you that do know, and I am not an expert by a million years, I learned one thing and I was taught one thing, which is when equities go up, commodities go down. When commodities go up, equities go down. I don't think that's exactly true.
Not true at all.
Hmm?
Not true at all.
Not true at all. Are they at all countercyclical? Did you just like them?
2008 didn't work there. It won't work anymore.
Won't work anymore? Do you want commodities?
Sure.
Case studies.
Commodities.
Hmm?
Tony likes commodities.
Well, the thing that's nice about my commodities is if it isn't number 1 or number 2, you don't get it. So it's got to be number 1 or number 2 to get it. That's, to Tony's point of the overweighting, that is the nice thing of overweighting. That's the nice thing of overweighting. Okay, let's have a look at a couple of case studies. We're nearly done, Tony. All right, here's a citizen of France. Male, 60 years old, lives in Paris, owns a home in the United States. There's my situs. Visits the US 2 months of the year, good health and no checkups, okay? We're going to give him 20 million, and because he's in France, and is a French citizen living in France, he's a preferred investor. So we say, okay, let's give him premium, or let's give him a policy, that carries, wage 121 is lifetime. Okay, we stopped running the illustrations at 121, but that's lifetime. So let's give him $20 million for his lifetime at 6.5%, and we're going to run him preferred best. Okay, the premium is 367. The death benefit guarantee runs to age 85. So it's effectively going to run for 25 years for him. Life expectancy is age 81, so you're covering his life expectancy. Cash value at year 25, which is his 85, 9 million. So he's got a lot of cash. Why is cash important to him and why is cash important to you? Cash is important to him because he likes the cash and he can do something with it. Why is cash and value important to you as the agent? 1035s. I mean, I hate to sort of stand up here and say, you might want a 1035, my policy, I understand. But it's reality, guys. It's reality. Things change. His client's circumstances change. Products change. Things change. Carriers change. There are a lot of reasons down the road there where that client may say, hey, you know what, I want to move out of that policy, or I want to do something with it. Or I want income out of it. Without any cash, you don't have any ability. Generally, it's very hard to move a client out of a policy. Have cash in a policy, you've got money to fund a new one. Todd?
The guarantee death benefit argument.
Well, maybe. He's at 85. Doesn't have to. I mean, you know, the guarantee, the death benefit. I will tell you, actually, at 60, I know it just by heart. It's one of the only ones I know by heart. I will tell you that $1 million, carrying him out to age 85, the cost per million is $400 a year. That's about the only one I know off by heart. That one and the 40. Okay. Target 848, premium 367, rolls for 2 years and 3 months. Mexican, male 45, owns a business in the United States. There's my scientist. Okay, visits the US 5 months a year, good health and annual checkups, $20 million, same thing again. Okay, in his case, basically, well, the premium's 175. In his case, at 45, the guarantee lasts to age 80, life expectancy about the same, about age 80. So he's got that death benefit guaranteed, like a GUL, to his life expectancy. Cash value at year 25, so that makes him what, 70? Okay, 4729. Target 344, premium 151, first year commission paid 2 years, 3 months. So if you summarize me, get the questions. If you summarize me and you look at me from the international underwriting point of view, you say 20 million, you say preferred best, doesn't affect anything else I'm doing out there because it's all Zurich's own money, got a good IUL, can add the guarantees, pays good commission, builds good cash, and has a pretty interesting crediting methodology that should, hopefully, deliver what we're hoping it will deliver. It shouldn't have, I mean, I will tell you the guy that is my president that I work for, that Tony knows very well, when he built the IUL, when we built it, one of his comments to me was, I want to create a product that shouldn't deliver, that has a really good chance of delivering no bad surprises. We don't like bad surprises in Mordin. I want something that's got a good chance of delivering what it says it's going to. That's it. Are there any questions? Yeah.
Okay, is that the base amount of coverage, 12 million, living overseas?
Sorry, say
the
again?
minimum amount? Is that the base coverage of insurance?
No, I can go
living
down
abroad?
as much. I can do 1,500,000. I think the minimum on my IUL is 250,000.
Yeah, 250.
Yeah, it's pretty low.
The maximum is 20 million though.
The maximum is 20.
Maximum,
And on an international, it goes to age 70. On a domestic American, U.S. citizen, it goes to age 80.
the minimum is 3 million,
The minimum net worth or the minimum face value?
base amount.
Face amount is 250,000.
20 million?
250,000. You ask the minimum face.
Quarter million.
Quarter million.
20 million coverage? I mean, the coverage of is that insurance, that or annuity?
Yes, coverage. Yes.
20 million maximum?
20 million.
Peter, and just looking at the two case studies you presented, is it a fair assumption to say that it takes about 20 years from looking at those for them to have been insured and have full repayment of premium in cash value?
Yeah, I would
roughly.
think so, Alan. I mean, obviously, it's gonna depend on the
Sure,
rate
sure.
and on ages, but I would say that's a pretty.
Carrying that level of life insurance that long
Yeah.
with a company with ratings like Zurich that's number one, an incredible story.
Yeah.
And number two, thank you for even suggesting the 1035 opportunity. At that point, they may not need all of that, so we don't have to take all of it in 1035. So thank you for that thought as well.
That's absolute pleasure. I mean, you know, the reality of life, guys, is I've been in the industry a long time. I've got lots of white hair. I see lots of other white-haired gentlemen around the room. You know, there's nothing wrong with 1035s. A lot of people have done very well over a long time by moving their clients into better products and into different products that suit their changing lifestyles.
Right.
And that's a big one. And I'm not trying to knock GUL because that's one of our products, but remember, that's a hard one to do with a GUL. You can't. You lock them in, he's in. Big difference.
Thank you, Peter.
Pleasure.
Thank you, Peter.